Stephanie, thank you so much for joining us here at Super Return International. You've been sharing your insights on the global economic picture, and obviously this industry has a lot to navigate at the moment, don't they? Because there's so many risks out there.
Yes, and I was struck when I was thinking about what to say to people here. I have thought back to sort of a month ago when I probably would have been quite upbeat about the global economy, and now we're all talking about the virus. And I ended up talking more about the virus than I anticipated, because one thing I'd realised is although this could be quite a short-term shock, even if it extends across the global economy and even if it does affect financial markets in the short term, it not only shrinks the economy short term, it magnifies long term some of the factors that we were already worried about, some of the fault lines in the global economy, not just the sort of low productivity growth we've seen and low wage growth in many developed economies, but the fact that we have this very integrated world, these very integrated supply chains that we're not entirely got a handle on, and indeed many voters are now suspicious of. They're sort of feeling very anti-globalisation. All of that sort of comes together in the response to this virus, as I thought it was interesting to look at that, but also ponder what the right lessons are for the future and for investors.
You mentioned there that the decoupling and the de-globalising that was sort of a trend we were perhaps going to expect anyway, and you see that exacerbating that?
I think so. I mean, I think there's a couple of ways. We know that there's been sort of political forces that financial markets have had to contend with, as reflected in the election of Donald Trump or Brexit, and indeed in Italy. Those kind of anti-globalising forces, the politicians taking advantage of the distrust that voters now have of the global system, the feeling that it doesn't work for them, I think that's going to be exacerbated by, or those politicians will be helped by the virus, because it adds to that feeling, if you like, that bad things happen when you're connected to the rest of the world. And I was very struck at the recent G20 meeting of finance ministers that it wasn't just the US, it was also the French finance minister actually questioning whether there should be such globally integrated supply chains, whether France itself could afford to be that interconnected with the global system. That's quite striking.
There's been so much talk for a while now about the end of the cycle coming. It's been such a great long run. Do you think this might be the thing that causes that to happen?
No, I think most reasonable estimates, and I'm not sure that it's almost a contradiction in terms because we have so little idea of how this could play out, but most reasonable estimates would say that this is a hit to global GDP over the next year or so, but it is inherently a short-term thing. It works its way through the system, we get a vaccine, whatever it is. So I don't think I would see this killing the global recovery, but it uses up more of that policy space for responding to a downturn that we knew was already quite short supply. The Federal Reserve has already had to use, and the ECB has had to use the policy space it had to respond to the last problem, which was uncertainty over trade wars. Now we're using up a bit more of that ammunition on the virus. It certainly raises questions going forward on that score.
Do you think it'll have a political effect? 'Cause obviously we've got a US election looming too.
Yeah, I think it's an interesting one. As I said, I think that there may be a sense in which people will feel that Donald Trump's suspicion of China has been confirmed, even though he was talking about it from a trade standpoint. Again, that feeling that bad thing has come from China is going to be potentially exacerbated. But another question that others have raised is whether it'll put focus on the quality of public infrastructure and particularly health in the US. Depending on how this plays out, we could see it affect the election, but I go back to I think the reality, which is we don't know really very much at all about what's going to happen.
Just shifting away from the virus for a moment, obviously I'd like to talk about Brexit and what impact you think that's had. Trade negotiations are now well and truly started. What do you see happening there in this next 12 months?
I mean, obviously the main point we have is that we have, if you like, the two impossible things that are supposed to happen. We have the UK saying that definitively it will have negotiated a full trade deal with the European Union, and that we can do that in the next year, and really much shorter period than that, because we know that it would have to be agreed in effect by the autumn for it to be ratified by European Parliament. If that does happen, that'll mean that it's quite a stripped down trade deal, and then there's still a lot of content still to be worked out. I think the bigger question is what kind of impact it's going to have on the economy, because the direction of travel for the UK is now pretty clear. It was that they were talking about a Canada-style free trade agreement. What they're now talking about is not even the level of integration that Canada has with its free trade agreement, which means a much more significant economic impact, particularly over the longer term. And that's something that we're trying to get our heads around at Bloomberg on the economist side and on the reporter side. How will different sectors be affected? But we do have an idea now of what the shape of that trade deal is going to be. And I'm afraid we also know it's going to be on the more costly side of the scale.
With all of that in mind, what we've just spoken about, on all those aspects, how on earth does this industry begin to navigate that? And what would you say they need to be doing in terms of perhaps scenario planning?
I mean, I think there's one of the things, that the luxury, if you like, that the private industry has is that they should be at least lifting their eyes from the short-term market moves. I mean, that's supposed to be one of the great advantages, that they can think long-term. And I've heard already speakers talking long-term about the opportunities that are out there, whether it's coming even from some of the factors highlighted in the virus, the fact that we might now more and more want to work at home for whatever reason, not just the virus, that there will be perhaps more production coming onshore. We're moving away from having quite such closely integrated supply chains. There's an enormous effort underway, obviously, on combating climate change. Some stranded assets will be left in the wake of that if we really move to a zero carbon world, but also some real opportunities. So I think that private equity actually has an opportunity that maybe other parts, the more mainstream traditional parts of the investment industry, don't have, to look through some of these concerns about the cycle and see some of those long-term trends, because they're still there.
Indeed, it does see itself as the sort of nimble part of the asset industry, really.
Yeah, so there's a funny thing, isn't it? The nimble but extremely long term, which is often a contradiction in terms, and of course not very liquid. One of the disadvantages that the private industry's had over the years is when there's such an onus on the investor standpoint for liquidity. That's obviously not something that private equity can offer. But I think more and more people are feeling, well, we're overpaying for extreme levels of liquidity, and we're not necessarily, we may even be exposing ourselves to volatility from that we'd rather not see. We need to be cautious, because there's been plenty of industries, parts of the financial sector in the past that have been talked up as being the great new thing. I suspect private equity will turn out to have plenty of skeletons in its closet as well. But there are some opportunities here.
Thank you so much for sharing your insights. Fascinating to talk to you.
Thank you.